Hello, today let us get an understanding of what we refer to as prepaid expenses, okay? And you will find these under accrual accounting because of the matching principle, okay? Once we get to do a practical example, you will understand what we mean by the matching principle. But prepaid expenses are advance payments made for goods or services to be received in the future, okay? So you make a payment of something as of right now, but the benefit of what you're paying for, you're going to receive it in the future. You're not receiving it now, okay? You're going to receive it in the future. That is what we call a prepaid expense, okay? And a prepaid expense, we classify it as a current asset. Why do we do that? Because it has an economic value. It has an economic value that you're going to get a benefit from it in future, okay? So this is usually classified as a current asset, okay? So let us look at practical examples to get what are these common prepaid expenses that you're going to find and what do we mean by prepaid expense, okay? The first example is we have KM Traders Limited paid for a 12-month motor vehicle insurance cover of an amount 120,000 on 28 December 2025 to cover the period from January to December 2026. So this is basically the business is making a payment of a motor vehicle insurance for the period January to December, but to December 2026, but they are making that payment in December 2025, okay? So they are paying this, they are doing an advance payment to receive the benefit of what they are paying for in the next period, okay? So how do we record this in our books? Remember, under accrual accounting, the matching principle where expenses are only recorded when they are incurred. When they are incurred, not when cash changes hands, but when they are incurred. So when you pay for this motor vehicle in 2025, have you incurred that expense? No, you are yet to incur it because you are yet to receive the benefit of what you have paid for, okay? So let us look at how do we record this as at 28th December 2025, okay? As at 28th December 2025, how do we record this in our books? And the first thing is, you can see when you make when you make a payment, definitely cash is moving out, so you have to credit cash, and you have to recognize an economic benefit that you're yet to expense. It's an economic economic resource that you're going to get value in future. So you need to record that asset. It's basically an asset, and we call it now what we refer to as prepaid expense, okay? Prepaid expense. Depending, some companies, you'll find them, they specify each specific account of prepaid. So for this one, they could say prepaid insurance, okay? Prepaid insurance. Other could just have one account for prepaid expenses, so they will just call it prepaid expense account, okay? And they debit an amount of 120,000. What they have done is, here they have recorded that economic benefit that they are yet to receive benefits from, and this is basically an asset account. This is an asset account, okay? Remember dealer, where on the left side we have assets here and we debit to increase them, okay? On the other side we credit to actually increase them. On this side where we have assets, now we have debited to increase the value of this asset account we are calling prepaid expense, okay? Then we need to credit cash account. Cash account is also cash account is also an asset account, and when you want to reduce it, you credit because you have paid out an amount of 120,000, okay? So this is what you record as at 28th December 2025, okay? So what do we record now at the end of 31st January 2026. How do we record? Be keen on how we do these adjusting entries, because we do this throughout the period that this prepaid expense is going to cover. Okay, so as at 31st January, now we have entered the period that these prepaid expense we should be receiving the benefits now, because this 120,000 was to cover the period from January to December 2026. So January is a month that we're supposed to be receiving the benefit of this insurance already. Okay, so what we do is we first divide this amount into the period that we have, which is 12 months. Okay, so we are going to have 10,000. So the benefit that you should be receiving monthly is 10,000. Okay, so then once 1 month is over, that is, for example, now as at this end of January 2026, then you need to recognize the benefit that you have received. So you need to recognize the expense, because now you have incurred it. And how do you go about that? You come and debit insurance expense, because now you have incurred, but you've only incurred up to a certain level. You've only incurred up to the level of 10,000, because it is the first month. Okay, it is the first month. So you debit 10,000. What do? You credit prepaid expense account, because you want to reduce prepaid expense account, because you want to reduce it. You want to reduce it by an amount of 10,000. Now you know what is going to be your new balance of prepaid expense. You're going to have now 120,000 minus less 10,000. So you're going to have 110,000. That is going to be your new prepaid expense, basically, as at 31st January 2026. So if you present the balances of this account as at 31st January 2026, you're going to see the balance for prepaid expense, because now you have credited 10,000 is going to reduce to 110, and this is because now the only prepayment we have is from February to December. And when you move to to February 28th or 29th of 2026, you're going to expense another 10,000. You're going to expense another 10,000. The same entries, actually. You're going to expense another 10,000, and you're going to credit prepaid by reducing it by 10,000, and then you're going to deduct, because you've credited, the balance will be now 100,000. So you will continue to share these 120,000. To divide these 120,000, you're going to be expensing it a portion till the end. And as at the end of the period, that is December 31st December 2026, this prepaid expense will actually be 0, and you will have recognized a full insurance expense of 120,000. So these adjusting entries for a prepaid expense is basically to be able to recognize expense when it has been incurred, not when cash has moved hand. Okay, it is being able to expense to recognize expense when it has been incurred. Now let us look at another example. We have KM Traders paid rent for 6 months for the period from January to June 2026 on 28th December 2025. So they have paid rent for their offices for 6 months, that is from January to June, and they paid it in December 2026. So this is a prepaid. They are yet to receive the benefit of now staying there. Not yet. Okay, so what happens as at this period, as at 28th December? How do we record that? We need to record the payment has happened. So what do again? We debit prepaid We could call it prepaid rent account, or generally, as I said, some companies just put every prepaid expense in one account and just call it prepaid expense account. Okay. Others, they specify this is prepaid rent, this is prepaid insurance. Okay, but all of them, they are assets account. Okay, they are assets account. So how much have we paid here? They have not specified. Let's say the amount was, let's say they were paying 20,000 times 6, that is 120,000 in total. Okay, so they prepaid 120,000. Okay, so that is what we are going to debit. Then we are going to credit to record that cash has been paid. That cash has been paid of amount 120,000. So 120,000. Okay, so so this is as at 28th December 2025. Now, how do we record these as at 31st January 2026? How do we record this expense for January, at the end of January 2026? We come and debit now rent expense. What do? We take, if we paid 120,000 for a period of 6 months, okay, how much is rent for 1 month? That is our calculation. We see it is 20,000. So we need to recognize an expense account of 20,000 because now we have stayed in that office for a month, and we have truly incurred the cost of staying there. We have stayed there, so we have incurred that cost of staying in that office. So we are going to debit 20,000, and then we are going to credit the prepaid rent account. Okay, we're going to credit the prepaid account 20,000. That is to reduce that asset account, because now we have we recognize the prepaid expense as at 28th December as to 120,000, but now we have stayed for a month. Our prepaid expense is no longer 120,000. It is going to be 120,000 less 20,000. And when you do the account balances and prepare the trial balance as at 31st January 2026, you're going to see our prepaid expense account is going to be reduced by 20,000. Okay, now let us look at another example. Where KM Traders Limited, apologies, just a second, yes, KM Traders Limited paid 30,000 on 29th January 2026 as accounting software subscription to use the software from February 2026 to July 2026. So this business, they use a certain accounting software that they pay for a subscription to use that accounting software for a period of from 6 months, that is from February 2026 to July 2026, and they paid these on 29 January 2026. So on 29 January 2026, how are they going to record this? Okay, so at this point, they need first to recognize that prepaid expense. Okay, prepaid expense of amount 30,000. This is Kenyan shillings. Then they are going to recognize that money definitely you have paid, so the cash account has reduced an amount of 30,000. Okay, then we're going to look at asset 30. Now this is 29 January 2026. So we are going to look at 28th of February, or rather as at the end of February 2026. How are we going to record the first month expense? Now, because we have used this software in that month, okay? So how do we go about it? We now debit to recognize that expense. We could call it software subscription expense. Okay, this is an expense account. To increase an expense account, you debit. Okay, so we recognize now. Remember, this 30,000 was for 6 months. So we want to know each month is taking what portion of the cost. If you divide this, we're going to see each month is going to take 5,000. So yeah, we are going to recognize 5,000 as at the end of February. Okay, and because now we have already incurred that, we need to reduce our prepaid expense account by 5,000. So basically, that is what we call prepaid expenses, and a prepaid expense is a current asset. What we have as prepaid expense is a current asset. As at a particular point in time, it gets reduced as you receive the benefits of what you have prepaid for, because now you have incurred that expense. Once you incur that expense, now you recognize it as an expense. But before you recognize it as an expense, it sits in your books as a current asset. Okay,